4th. Let's get right to it. Amazon was my last pick of the day. Video came out August 1st, which was right here. I loved selling an out of the money bullish put spread, keying off of that 125 strike price right in here. You'd have to go out about 3 weeks or so, which is fine because I'm expecting the market to have some nervous jitters, but in general, for the bid, the low of the year to hold up very, very well. We'll get into market analysis in a little bit, but you can see nice big gap up after earnings. These moves typically take a little time to digest. Once the stock has been able to hold the bid, it demonstrates that buyers are still engaged, and eventually the stock starts to lift off. Here's the 5-minute chart. You can see how beautifully Amazon went up yesterday. So a long way away from that 125 strike price. I love selling these out of the money bullish put spreads because now we have confirmation that the buyers are back and that the low of the year should hold even with the nervous jitters that we're likely to see in August and September. I believe the market's going to hold up pretty well. We want to take advantage of accelerated time premium decay. We want to sell out of the money bullish put spreads below technical support. And we want to take advantage of that time decay. Right now, I think the market's just going to go sideways. So Amazon, nice pick. Let's go into the daily chart of the S&P 500. Downward sloping trend line. This was a big deal when this broke through. We also got through horizontal resistance. We also got through the 50-day moving average, so let's put those up. And the 100-day moving average has also been breached yesterday. Here's the problem. Love everything that I've seen. Had a decent reaction to the FOMC statement, even though they are indicating a 50 basis point rate hike in September and then 25 basis points the next two meetings after that. So another 1%. That has not hit the economy yet. All the interest rate hikes to this point have not really cycled through the economy. So we'll see what happens. Asset managers, I believe, are going to be relatively passive in August and September. This is a time when the market tends to have very, very light volume. Everybody's taking their remaining vacation days. You have politicians going into recess. The Fed is in recess. And usually lots of little stuff starts to just fester and stew. It could be something as simple as Nancy Pelosi going to Taiwan. All of a sudden, that headline means something because there's a news vacuum that takes place in August, and they're looking to latch on to anything they possibly can. This is also a time when the market gets super, super dull, very light volume, that you have to be careful when you're day trading because you'll see a lot of recycled news headlines hit the market. And media companies love putting this news back out there just to keep some headlines going. And you've got institutions who have optical readers and co-location servers. They get on these news items right away, and then you see these big drops in the market. So the key is when you have light volume and you have compressed trading ranges, you need to keep your trade count down. You need to reduce your size. You need to be more passive with your profit taking. So those are things that you should be keeping in mind. It's kind of like walking on thin ice. You just want to make sure that when you have profits in your trades, take them. Don't piss your capital away in a low probability market environment. We're going to be heading into one. And I know this rally feels really, really good. I like it too. I'm seeing some things that I like as well. Tech has a bid. That is critically important to the market being able to have a sustained rally. But I've also seen a lot of junk starting to rally recently. The pot stocks, some of the crypto stocks, a lot of the really beaten down names, some of the short squeeze plays, AMC for instance, and those are getting attention. That's usually not a great sign. I call that the dogs are barking, and the dogs are barking. This 100-day moving average has provided some resistance, and you can see that the volume is starting to fall off. This is not a great rally. You can see tick, 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 down, down, down. Not good. This is what we want. Big volume on those rallies. But Right now, you can see how it's drifting lower and the candles are getting compressed. This is a beautiful move. I believe that between now and Labor Day, we're going to test that 50-day moving average. Am I worried about it? Not particularly, because I believe that this low of the year is pretty dang safe. Economic numbers have remained decent. I believe the jobs report tomorrow is going to be decent. Initial jobless claims over the last 4 weeks have held steady. Yes, they're ticking just a little bit higher, but nothing too concerning. That is good news. As long as the economic numbers are stable, the market should be able to hold its bid very, very well, while asset managers wait and watch to see what happens with growth. So the theme right now, be careful in August. This is typically a light volume month, very low probability, and that continues even into early September while everybody's trying to get back on track. So selling out of the money bullish put spreads on strong stocks is okay because the stocks have relative strength, and we want to make sure that we are selling those bullish put spreads below technical support. Amazon, for instance, when we looked at that daily chart, we were selling below the 100-day moving average. We were selling below that horizontal support and that horizontal support. So we had lots of protection in there, lots of resting points for the stock, and we want resting points because tick, tick, tick. When the stock rests, time decay is always working in our favor. So if I were going to be more aggressive and I didn't feel that the market had a chance to pull back, then of course we would be taking more aggressive option strategies right now. But we want to give ourselves plenty of breathing room. We want to stay away from the action so that if we do get that market pullback, it's okay. It'll be fine. In fact, that'll probably be an opportunity for us to add to positions. So right now, as far as the market is concerned, I believe we're going to see a little bit of a dip in here. I'm not bearish. I'm not going to try and time it per se. I'm going to give you a long to look at, and I'm going to give you a short to look at. I'm going to be taking some time off. I'd really encourage you to try and take some time off in the next 2 or 3 weeks. It's going to reduce your temptation to trade. The volume's going to be super light. This is a great time of year to just take some time off. I schedule it every year, and when I come back, I look at what's happened in the market. Not much. So let's take a look at the action yesterday. I want to talk a little bit about price action. We had this gap up yesterday, and you can see this early rally in here. We had the 1OP indicator. I'm going to take the major moving averages off. We had the 1OP indicator early in the day telling us we should be cautious on the open. We don't need to chase this gap up right here. You can see how we had tiny bodied candles in here. Grind, grind, grind higher. We've got our bearish cross right in there telling us to be careful. Wham, you get this long red candle. So this flushed out all the early buyers. This is where the support started to form, and you could see tails under body, tails under body. We're able to preserve the low of the day. Okay, things are looking pretty good in here, and we've got a bullish 1OP cross. Downward sloping trend line right there. Nice long green candle in here after these bullish hammers. Hey, things are looking pretty good in here. So then we get this little grind higher. This is a low quality rally. I read a lot of people in the chat room being super frustrated. Oh my gosh, if only I would have hung on to my trades a little bit longer yesterday, I would have made so much money. But I didn't really like what I saw in the market. And I have to agree with you. This is a low quality rally. Look, nice long green candle, almost entirely retraced during the course of that candle right there. Now it did finish on its high. Quick point, don't ever assume that a candle that is red like this is going to remain red. Oftentimes, in the last minute of that 5 minute bar being formed, you will see a complete change in character. And in this case, it could have been red until the last minute and then boom, closes on its high. Now it's actually pretty bullish because they tried to sell it off and they rallied it back. That tells me the bid is still there. Is this anything tradable, just this one candle? No, not really. But you start to see that same pattern again. They try and nail it, they try and hit it. market bounces back, and you've got this bearish cross right here in 1OP. They try and nail it. They try and roll this thing over. No, buyers are back, and we continue to float higher. Lots of mixed green and red candles, tons of overlap all along the way. So at any juncture in here, you could be saying, I'm not getting a feel for this market. I'm going to play it safe. That's fine. That's actually what you should be doing. I view this rally yesterday as being number one, program driven, number two, a seller's boycott. What the heck does that mean? It means that nobody is really aggressively selling. They have no real reason to sell. They like what they've seen in the market. So if you want to buy some, here I am. And they keep raising their offers. So it's not as though the market is rallying on heavy volume. It's not as though buyers are ultra aggressive. They aren't. They're just nibbling. And it gives the appearance that the market is super strong until you look at the volume and you realize that we're just floating higher. These gains can easily be stripped away. So if you're looking at your positions and going, hey, gee, I really should have stuck with them longer. If the stock was doing what it was supposed to do, and it was ticking higher, and it was indicating to you that it was going to continue to float higher, you'd really have no reason to get out just because the market looks a little bit overextended. Keep it on, use a trailing stop, try and ride it as long as you can. And when you get markets that get into a compression like this right in here, where we're range bound, what that tells you is you don't have to worry about the market too much because every little dip, buy it, buy it, buy it, buy it. So you know the market's not going to go anywhere. They've tried to smack it down. The stock is going to have to do all the heavy lifting because you don't have that market tailwind. And that's okay. As long as the stock is grinding higher and grinding higher, a lot of these stocks have been heavily sold off this year. So they've got lots of upside room. And as soon as some of that volume starts to come in, they can grind forever. I noticed a couple of stocks yesterday. I think Apple was one that I saw early in the day, and you can see how it almost closed on its high of the day. You look at that 5-minute chart, and it just grind, 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 grind. There's really nothing in here to tell you that you've got to get out. Okay, you see this long green candle given instantly back. Yeah, you could take gains right in there because it's erased, and that was the high of the day or very close to it. Yeah, you could take gains in there. No reason to ride it higher, but there were other stocks where you did have opportunities to continue to ride them, and you didn't have to worry that you were going to have the market rug pulled out from underneath you because you see all of these long tails. Until you start seeing some organized red candles that are more than just a one-off, stick with your position. Start seeing something organized. Red candle, red candle, red candle. Blam! Nice long red candle down into this area here to the top of that green candle. Okay, now we got 4 in a row. That's looking pretty substantial. Now, I probably do want to take some profits, go to the sideline, see if they can eat into that green candle anymore. If it starts getting organized, then yes, you've got reason to get out. As long as these are just one-offs and then right back, one-offs and right back, and you got tails under body, these are bid checks the whole way that have been successfully tested, and the SPY was able to finish on its high for that bar. So those are just some tips, but yes, this is very light volume. So we're going to do something a little different today. I've taken a 90-minute pause. The market's been open for 90 minutes. We're going to be able to take a look at my pre-market analysis. Then we'll be able to go through and take a look at some trades. We'll find a bullish pick and a bearish pick so that we're covered regardless of what the market throws at us. Let's start with the market. I've already given you a lot of market analysis. I told you that this was not a very strong rally. Lots of overlap, lots of mixed candles. So this morning, I told members in the chat room, be cautious on the open. We don't need to rush in. This was a low quality rally, and we have a bearish 1OP cross setting up right here. So after the open, we've got 1OP starting to crest and ready to roll over. Excellent. This is a time where we just wait for the market. We see what the bearish cross brings. Maybe there's going to be a sell-off. Normally, on a bearish cross, you're going to see some selling pressure. That's exactly what happened. You can see how that was a marginal new low. Lots of checks in here, meaning sell-off, rally back, sell-off, rally back. Here, probing to the upside. It's kind of choppy price action right now. We get this long green candle right here. Now, this could be the sign that support is forming. So we don't know yet, because if this were a long green candle that boom, boom, boom were quickly erased, that would tell us that it is just a little short covering bounce, something to shake out short sellers. But if we get a little bit of traction and we start adding to this candle, that tells us that this is a good sign and the support is forming. Why? Because if sellers were super aggressive and this were just a short covering bounce, wham, 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 they would be right back in there. But they aren't. You can see there was still some lift in the market. So any little retracement in here, we'd like to see the halfway point of this long green candle preserved. That would be awesome. You can see 1OP. We don't have a bullish cross yet, so we need to wait for that bullish cross. Ideally, we get the bullish cross, starts coming up, and we preserve the midway point of this long green candle. That's when I would be looking to buy, because I've got the bullish 1OP cross, and I know that I've got a higher low double bottom, and I know that this is not just a solo, that there is actually some support starting to form. And given the longer term market rally right here, at some point, buyers are going to come in and they are going to flex their muscle and see if they can get a nice little rally going. So the other formation that I'm a little bit aware of right now that I'm watching is, you can see long green candles, lots of red candles, lots of mixed candles. We could have a downward sloping channel forming right here. So let me grab the trend tool and I'll draw that in. And once you have your channels drawn, ideally, the lines are fairly close to parallel. Those would be the most ideal trading channels as far as being able to really track them. This is not quite parallel, but pretty close. Well, now all of a sudden, when you add the channel, it's like, okay, resistance, support, resistance, support. You want to be selling when it gets close to the upper end of that band. You want to be buying when it gets down here. Is this going to be a trading channel? I don't know yet. We've got to see if we can get through this downward sloping trend line, and on this bullish 1OP cross, if we can get above it, then that would negate this trading channel. This would probably be the low of the day, might get a higher low double bottom, and then we start drifting higher again. So those are the things that I'm going to be watching for right now. And I believe, just given the strength in the market the last few days, when the market starts to really get quiet, dull trading favors the current market trend. So the current market trend has been up. I think we're going to continue to see some decent price action. So let's continue. Let's see if we can find a nice, I just got filled on a order there. That's nice. I am long futures right now. So we'll see what happens with that. I had an order out there and I'll be watching it with one eye, but not too concerned about it. So I'm going to go in and take a look at Green Royal Flush. This is a search I want to take a look at, and we're going to look and see what we've got going here. Really nice gap up here, but you can see how the stock has been reversing, and it is below the 100-day moving average. So I'm going to keep looking. Very choppy. That is Visa. AMD. I like it. This could easily be my pick of the day. Downward sloping trend line, breached to the upside, 100-day moving average tested a few times, breaking out to a new relative high. Look at that relative strength. Put up one OSI. You're going to see orange line above zero. Market has been in this downward sloping channel today. What has the stock been doing? It has been inching its way higher, and it is through resistance. Look at that relative strength. AMD could easily be the pick of the day, but we're going to flip through. We'll take a look at a few more stocks. These are the types of things that I'm looking for. You can also see the volume has been heavy. That's another key ingredient. And right now, when the market is slow, you want to make sure that the stock has heavy volume. It's going to have to do all the heavy lifting. So even if the market doesn't have heavy volume, which yesterday was light volume, if the stock has heavy volume, that tells you that there's a lot of buying interest in it. So let's continue to take a look, see what else we can find. I believe we're also going to see a little bit of a test higher this, continuing to scale in here. So this high right here is likely to be tested 415.60 at some point today. Will that upper end of the range hold? We'll see. You can see the early part of the day, there's been a lot of bid checks. They want to make sure that buyers are still there. I believe that that's also what's happening today. So we'd like to see this 1OP cross, and then we'd like to see us get through this downward sloping trend line. So let's keep taking a look and see if we can find some other stocks that are setting up well. AFRM. I like it. Horizontal resistance also lines up with the 100-day moving average. Very nice. Earnings 825, so we've got plenty of time on that one. This stock has lots of room to run. Put on the 5-minute chart, and you can see how it's continuing to push higher. When you see price action like this, run, pull back, run, pull back, that tells you you do not need to be chasing the high of the day. Ooh, 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 here we go, here we go. Oh, I gotta have some. High of the day. Oh, this looks so good. Pulls right back. Well, what was the clue? Pete, the market was grinding higher yesterday. This stock's making a new high of the day. How do I know it's not the one that's going to go boom, boom, boom? Relative weakness right in here. You can see orange line is below zero. It's not able to keep pace with the market. So you wait and you wait until you get, hey, there's a nice cross back above. So we have some relative strength, downward sloping trend line. Yeah, this would be a good entry point in here. Don't overstay your welcome because you know the stock has not been all that strong yesterday. So today, oh, here we go. Get all excited. No, it pulls back. Now you get this pullback and you get a nice green bullish engulfing candle in here. Okay, this is a place where you could get long. And then you'd like to see it get through the halfway point here. It does. Now you're getting up near the high of the day. Market's still not showing you anything great. Okay, you could take some gains up here and wait for the next dip and ride it higher. So the character of the stock doesn't change from day to day. You've got to be able to look back at 5-minute charts and see, is this a steady grinder or is this one that I can expect is going to pull back after a nice run and give me a better entry point? So you can see market's rolling over just a little bit. We've almost got that bullish cross in here. We really want to see that halfway point preserved on this long green candle. So let's watch for that as well. I'm going to continue to go down. MARA. You can see big run early. It's continuing to fade here. Let's keep it on the daily charts because that's where we want to focus our attention. Not bad, but it's got to get through the 100-day moving average. When? Not bad. It is through the 100-day moving average. When is also through this downward sloping trend line right here. Compresses, and now we've got a nice head of steam. Doesn't look too bad, actually. Looks pretty good. Let's go into another search, see what's in Pop Bull. TSM. Not too excited about anything I see there. Let's go into some of our day trading searches, see what we've got here. AMD again at the top of the list. Airbnb. Not looking too bad, but you can see these overlapping candles here. I don't want any overlap. I want them stacked, just like on the bearish side. Stack, stack, stack. Okay, we're going lower. And there's your follow through. That's what we want. We want those candles stacked. Wouldn't touch that with a 10-foot pole. That is a weak stock. And so we're going to continue to just go down through here. I'm going to take a look at red hot, see if there's anything there. Visa. Okay, well, Visa's still got to get through this downward sloping trend line. There's a very short-term trend line right in here. So this would technically be a bullish flag formation above the 200-day moving average. That's good. See if we've got anything on bull run. WKHS. That is one of those short squeeze stocks, and it is taking off in this last leg of the rally. I believe I mentioned in my video that we've got a lot of these dogs are finally starting to rally. That also is a sign that we're in the later stages of this market bounce. When all the laggards start to catch a big bid, you have to be more cautious. So I'm going to take a look and go, I'm just going to go with we'll take a look at one more list. So the reason that I like this list is you can see at the market in the last 30 minutes, yes, it's up a little bit, but not a lot. I want to see which stocks have been strong relative to the market in the last 30 minutes. And Crocs actually is down after earnings. Don't see anything there. SQ has to get through the 100-day moving average. Right now, AMD is the best stock that I see in terms of being able to day trade it and in terms of being able to look and find a nice bullish put spread. So that 100-day moving average is right around $95. So I think that's going to be a pretty good level to look for that bullish put spread. But you can see we're fairly close to it. We're about $6 away, and the stock does have a tendency to make some pretty wild moves. So first thing I would want to do, I would want to see the S&P 500 find support. I want to make sure that this low of the day is holding, that we don't continue to drift lower in this channel. I'd also like to see this bullish 1OP cross get us above this downward sloping trend line. Then I can feel pretty confident that at least for the day, AMD is going to have a decent market tailwind. It'll continue to grind higher. And as far as selling out of the money bullish put spreads on this stock, I would probably favor getting below that $90 level. It's going to require the stock to come back and test that 100-day moving average in order for us to sell that $90 put. I would normally not have a problem selling an out of the money bullish put spread on a stock like this, but I think the market's going to get a little bit tired in here. We don't like to see market rallies on low volume, and that's been an issue in the last stage of this rally. So I think the market's going to come in. When it does, I think you're going to have a chance for AMD to test this 100-day moving average again, and then you'll be able to sell a bullish put spread, maybe the 87.50, 85 bullish put spread on AMD, looking to get 50 cents for it. Go out 3 weeks or so, take advantage of accelerated time premium decay. As far as just flat out day trading, I like AMD. I think there are going to be some opportunities. Make sure that you wait for those dips to line up because this stock has dips. So you don't want to be chasing up here. You want to see this dip continue to come in, and then you'll be able to buy it. Click alert. Click that baby right there. Click that one right there. Upward sloping trend line. When it pulls back to that, I'm going to get an alert. Then I'll start setting a downward sloping trend line, and I'll know when that's breached to the upside because that will give me another good entry point provided that the market's starting to line up. So let's go back in and keep that 5-minute chart up, see if this critical level right in here, I want to see a higher low. This would be a higher low double bottom. We're just now getting a bullish 1OP cross, so that's good news. And we want to take out this 414 level, that downward sloping trend line. If we do, then we're going to test the high of the day. That's how I'd be trading it. So let's continue with our analysis. I also want to take a look at what might present us with a good bearish pick. Now the energy stocks have been super weak today. Let's go into that daily chart. I don't see anything there. I'm going to go right to Walmart's on the list. Nothing there. APA. Yes, there you go. Upward sloping trend line. Breach to the downside through the 200-day moving average. Stock closing on its low when the market rallied yesterday. Follow through today. Yes, that's a good short. XOM. Upward sloping trend line. Very steep through the 50-day. Now below the 100-day. Good short. I like it. DVN. Upward sloping trend line, breach to the downside, still has to get through the 200-day. Not as good because XOM is already there testing the 100-day moving average. That could be your short pick of the day. You can see earnings right there before the open. So they ran the stock up on that earnings announcement. And then it was a giant head fake because all they've done is nail it ever since. And I believe the stock's going to continue to go down. I believe you're going to see weakness across the energy sector. We are seeing energy prices come down. Just going to click through a few more, see what else is going on, see if we can get something out of the energy sector instead of just focusing there. But I think that's going to be your bearish pick of the day. We're going to go with XOM. It's got really liquid options. It needs to be below this 100-day moving average. And I would put another caveat on this since I'm not going to be around. You need to have some market weakness before you take a short position. So let's make sure that that SPY is also below the 100-day moving average. If it's below the 100-day moving average, which let's call it 411, is about where the 100-day moving average comes in. SPY below 411, XOM below the 100-day moving average. Get both of them below those 100-day moving averages. You've got a really nice shorting opportunity. As long as the 100-day moving average is intact and we stay above it, you're going to want to focus on AMD, and that is going to provide you with some nice day trading opportunities. Obviously, we want AMD to stay above the 100-day moving average, which it is right now. This is going to present you with a nice opportunity today. That's all I've got for you. I hope that this format helps you a little bit. I did some market analysis before the open. Then I concluded that video and decided to wait 90 minutes so that I could talk about what we saw before the open and then to actually see how things played out. And right now, we are almost 2 hours into trading. I like this formation. The market is going to go higher from here. I would be, and I have been, buying futures during the video. Higher low, double bottom, 10p, bullish cross, getting through this downward sloping trend line. Watch for us to grind higher. Are we going to take out the high today? I don't know. I know that the bid has been checked and buyers are still there. So yes, we're going to at least float up to that level. Trim your trade count, trim your trade size. Things are going to get really quiet in the next 3 weeks. Don't waste your money in a low probability market. Good luck with your trading. We'll see you soon. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.